Okay, so let's get started. So before today's class, please join me as we pray the True Millionaire's Prayer by Brother Bo Sanchez. Lord, today we ask you to bless us so we may become a blessing to others. Lord, we commit ourselves to enrich others. But because we cannot give what we do not have, we commit ourselves to become rich. We commit ourselves to serve you and to serve the poor with our wealth. Today, we open ourselves to the abundance of your universe. Use us as your channels of love. Give us the ability to create wealth that will bless the world. Increase our financial wisdom and expand our territories. We place our lives in your hands. In Jesus' name we pray. Amen. So, hello again, everyone. Welcome back to our daily fun day habit. Thank you for joining our financial literacy class today. How is everyone doing? Can you give me a heart reaction if you're excited and ready to listen for today's class? Can you give me a heart reaction? All right, thank you very much. That's wonderful. And I hope we are all ready to listen and to take notes as needed. You can also take screenshots of information that interests you all throughout the presentation. If you have questions, please write them down and talk to the person who invited you. We value your time with us and we will ensure that this next hour is going to be worth it. So for today, we will be discussing about 5 topics. One, we will get to know what IMG is. Two, we will discuss about the financial challenges that we face. Three, we will learn about the 4 basic financial concepts. Four, we will introduce to you about Kaiser Healthcare Program. And five, we will share with you the benefits of being part of the IMG community. And with these 5 topics, all of us here today should be able to learn something new, relearn something familiar, and unlearn something that needs changing. And to introduce myself, my name is Mayyu Cappleman-Bajet, and I will be your host for today. I am a marketing director here in IMG, and I am very much excited to share with you what I have learned by being a part of this community. In IMG, our mission is to educate 30 million Filipino families by 2030. And that's why I congratulate you for taking the first step towards financial literacy, towards overcoming poverty, towards financial independence. You are here because someone thought of you, and that someone believes that you will greatly benefit from what you will learn today. And what you are about to learn are all taken from this book entitled The Secret to Saving and Building Your Future. And if you want to get a copy of this book, please ask your inviter for details. Okay, so what is IMG? So what you see on the screen is the official logo of IMG, its website, and its current campaign. So IMG stands for International Marketing Group. It is a global company that serves as an avenue in achieving financial security. It caters to the financial needs of every individual and families who wish to achieve financial independence. IMG's mission and vision is about helping every Filipino family to become wealthy or rich or financially secured by making financial education available for everyone, regardless of status or professional background, by teaching every Filipino how to save the right way. In IMG, we will share with you a financial planning strategy that is simple, clear, doable, and easy to understand. So, in other words, IMG is a financial brokerage company who assists individuals and families who want to help themselves achieve financial freedom through financial education. We highlight financial education because we all know that money is powerful. It is powerful that it can either make or break us. So in IMG, we will learn that there is something that is more powerful than money, and that is financial education. Financial education is not just for the rich, the wealthy or the business people, but it is for everyone. Further, financial education was not taught to us back in high school or college, when in fact it is an important subject, concept, or practice that we need to learn, just like math, science, or history. We were taught how to work for money, but we were not taught how to have money work for us. And it's time to change that mindset and practice. And that's why IMG aims to spread awareness to all Filipinos around the globe about financial education so that all of us can achieve financial success. Financial education aims to provide the necessary tools to achieve financial security. Here in IMG, we combine a great mission that is to provide financial education and a potential business career in the financial industry. We are here to share with you the basics of financial education because we believe that anyone is capable and should be given the opportunity to change his or her life for the better. Here in IMG, we also have mentors, we have coaches, we have trainers, we have people we look up to, people who are experts in their field to teach and guide us in our journey towards financial freedom. Showing you are the pillars of IMG, namely Sir Joan de las Peñas, Sir Noel Arandilla, and Sir Bart Borja. They are considered the big three of IMG. We also have notable mentors. We have Brother Bo Sanchez, who is a Catholic lay minister and writer of several financial literacy books, and Sir Rex Mendoza, who is known as the investment guru. He is the president and CEO of Ramper Financials, which is the leading mutual funds distributor in the country. So, as a total financial solution, IMG will help us to become financially educated as well as give us opportunities or platforms to apply our learnings. So, if IMG is the total financial solution, what are then the problems or challenges that IMG aims to solve through financial education? So there are four major areas of financial challenges that a large number of Filipinos are facing or will face in the near future. The first one is the uncertain labor market. This means that there is no security or assurance that our jobs will last long, especially those in the private sector. We are not certain if our jobs will be there in the next months or in the next year, just like what happened to most people during the pandemic that's going on for almost 2 years now, right? So nobody expected this to happen, yet it happened, and it left thousands of Filipinos struggling to make ends meet. And with advancing software and technology, everything seems to be digital nowadays. If you noticed, automation is starting to take over. Kiosks, such as what you see here, located in fast food restaurants, in cinemas, and anywhere else, are now being widely used by most companies, thus replacing more and more human workers. The second major area is low savings and high debt. A habit that adds to low savings and high debt is the mentality of party now, bahala na later, or YOLO, you only live once, or bahala na si Batman. We spend our money without considering of our future. When we receive our paycheck, we rather eat out, watch a movie, go shopping, instead of saving first or setting aside money for emergencies. So our lifestyle and spending habits can add to this predicament. We might not admit it, but we also have this tendency to buy more than what we need. For example, we do not need a new phone or a new pair of shoes, but because a new model is out, we want to be with the trend and buy that new phone or that new pair of shoes without considering if we can really afford it. We tend to buy expensive and trendy items just because most of our friends buy them. So these lifestyles and bad spending habits have a big impact on retirement. Instead of a worry free retirement, the retirement money that we get is used to pay for our debts, of our loans, our utang. So, in short, nothing is left for us to spend when we get old, and especially when we no longer have jobs, right? So that is why there are people who continue to work beyond age 65 in order to survive. So they will take any job so they can have something to use for their daily expenses. The third major area is the high cost of education. In most schools, the increase in tuition happens every 6 years, but in some schools, it can be every year. So when we plan for our children's education, we must take these increases into consideration because the tuition fee this year might double or triple by the time our kids will start college. So the bottom line here is there will always be expenses for education, whether our children are enrolled in public or private schools or in any school for that matter, and even when they have scholarships. And these expenses include allowances, food, school supplies, books, rent for housing or dorm, transportation, clothes, computers, internet, and others. And we all want our children to be in a good school. Hence, majority of Filipinos need to save enough for the cost of a good education. And the fourth major area is the increasing cost of living, and this is directly affected by inflation. So, inflation is the rate at which money loses its value and the level of prices for goods and services is rising. So as we can see here, the inflation rate last December 2020 was 3.5%, and it went up to 4.2% in January this year and further up in April 2021 at 4.5%. And I believe in July or August, the latest report was that inflation was at 4.9%. So the higher the inflation rate, the lower the value of our money. So let's take our 1,000 pesos for example. So let's say 5 or 10 years ago, we can buy groceries for 1,000 pesos and it can last us 2 weeks, right? Today, that 1,000 pesos can only buy groceries that is good for, let's say, around 5 days. Thus, inflation affects the purchasing power of our money. So, in summary, these are the four major areas where most Filipinos are financially challenged. So, considering these challenges or realities in life that all of us will face, the next question for us would be, how do we overcome these challenges? What can we do, right? How can IMG help the Filipino rise from these challenges? It is important to know that our future is not in the hands of anyone else. Not our company, not our friends, not even the government. Nobody has the responsibility to make our life better and financially secure except us. In IMG, we will learn how to make money, save money the right way, accumulate money or how to grow it, and most importantly, to protect the money that we worked hard for. Moreover, we can be our own money manager by understanding how money works and how it will work for us. That's why IMG encourages everyone to acquire financial education because financial education, together with discipline, will help us become wealthy and financially secure to overcome the challenges that we face in the four major areas. And to understand further how money works, let us first learn four basic financial concepts. So these are saving the right way, the X curve concept, the power of compound interest using the rule of 72, and how to build a solid financial foundation. So the first concept, saving the right way. So in general, people save money in three ways: the wrong way, the right way, and the abundant way using the abundance formula. So the wrong way of saving is shown as income minus expenses equals savings. So this means that when we receive our income, we spend first on our expenses and save what is left. So this is the wrong formula of saving because what if there is nothing left to save after expenses? So the possibility of having savings is low if this is the way we save money. This means that we are not setting aside money for future expenses or for emergencies. On the other hand, the right way of saving is shown as income minus savings equals expenses. So this means that when we receive our income, we save first and spend what is left. So this is the right way of saving because we prioritize in setting aside money for our future selves before spending them on our expenses. In short, we are paying ourselves first. So the possibility of having money for future expenses and emergencies is high when we follow this formula. And lastly, the third way of saving, which is the abundant way, using the abundance formula, is income minus tithes minus savings equals expenses. So this is the abundance formula of saving because we strongly believe in sharing our wealth or sharing our blessings and giving back. So tithe is the money that we give to the church or an organization that nurtures our spiritual growth. The amount of tithe is 10% of our income, and we can always adjust the percentage depending on our preference or capacity. Thus, earn 100%, give 10% of our income to as tithe to God, invest 20%, and live on 70% of our income. And this allocation can be adjusted based on how much our money is growing. We can give more, we can invest more, and cut down on our expenses. So, further, if the abundance formula of saving is not exactly our cup of tea or it is something that we do not normally practice, make sure then that we are saving the right way by paying ourselves first before spending money on expenses. That way, we will be secured with enough money for future expenses, for emergencies, and for retirement. And take note that saving has three characteristics. It is a sacrifice, it requires self discipline, and it needs to be consistent. All right? Okay. So the next financial concept is the X curve concept. So the X curve concept states that ideally over time as we get older our responsibility decreases and our wealth increases as shown by the two curves that run to opposite directions during our lifetime. So the red line is our responsibility line and the green line is our wealth line. So when we are younger, we have high levels of responsibility. We have the responsibility to take care of our family since we are the ones working to help our parents, our siblings, or if we are starting our own family. If we are the breadwinner, it is our obligation, whether we live or die, to provide for food, shelter, clothing, education, healthcare, and to pay our bills and loans. Our income during this time is usually temporary and our needs are permanent. Thus, we are using a temporary income to support permanent needs, and thereby we are less secure. At this time also normally we have little or no savings at all. That's why we work hard to have money and to receive active income to provide for us and our family. On the other hand, as we get older, ideally we are increasing our wealth because by the time we are 40 or 50 years old, we are already done paying for our loans, our debts, the education of our kids, the house, the other expenses, and we are saving and investing more. Hence, as we get older, we have lesser responsibilities and more savings and investments. Okay? Because even though we have these responsibilities, we continue to save money the right way, and that is paying ourselves first. So the goal is to accumulate enough savings that will support us during our retirement years. So when we retire, we continue to receive income from our investments because our investments is how our money is working for us. And this income that we receive from our investments is called the passive income. Thus, when we get older, we say we are more secure. However, when we are younger and fulfilling our responsibilities, we need to consider the question, what if we die too soon? Are we prepared for this? Who will then take care of our families who are depending on us? And when we get older, what if we live too long? Do we have enough savings that will last us 20 to 30 more years? Who will take care of us when we get sick and need to be hospitalized? Are we going to depend on our children? Are we going to be an additional responsibility to them? So if we die too soon, life insurance can help take care of our family, because life insurance is equivalent to instant cash that can help our family in the event we die too soon, we die prematurely. And if we live too long, investment and long term health care will take care of us. So, as parents or future parents or a working spouse or partner who are financially educated, we now know that we need to take care of our families who are depending on us during our younger years, and we should not make our children our investments or retirement fund when we get older and retire. So let us strive then to have life insurance during our younger years to take care of our family if we die too soon, and start our own investments and long term healthcare plans to take care of us when we live too long. All right? The next concept is the power of compound interest using the rule of 72. So, compound interest is the interest earned on money that was previously earned as an interest. In other words, interest on interest over time. And this is best described using the rule of 72. So the rule of 72 was popularized by Albert Einstein, and it is a shortcut used to estimate the number of years required to double our money at a given annual rate of return. We simply divide 72 over the interest rate. So if we have, let's say, if the interest rate is 4%, then our money doubles every 18 years. For an 8% interest rate, our money doubles every 9 years. And for a 12% interest rate, our money doubles every 6 years. Easy as that, right? So to illustrate, let's take an example. So let's say this is you and you are age 29 now, and you have 100,000 pesos to invest. Next, you put your 100,000 pesos in an account that gives a 4% interest rate, and at age 47, your money has doubled to 200,000 pesos, and at age 65, your 100,000 has grown to 400,000 pesos because your investment doubled every 18 years. Okay? However, if you invested your 100,000 pesos in an investment account that gives 8% interest rate, then at age 47, your money has grown to 400,000, and at age 65, you have 1.6 million pesos because your investment doubled every 9 years. So see the difference of investing with a 4% interest rate and an 8% interest rate? So how much more if you invested your money in an account that gives you 12% interest rate? So at age 47, your money has grown to 800,000 pesos, and at age 65, you have 6.4 million pesos because your investment doubled every 6 years. So basically, when we invest our money, the higher the interest rate, the shorter the time that it will take for our money to double. Or the higher the interest rate, the faster our money can double. And keep in mind that compound interest works best when investing for the long term, and that is around 20 to 40 years. Okay? To give you another example, so let's assume we are investing in a mutual fund that provides a 12% average annual return, which is the interest rate. So using the rule of 72, our money doubles every 6 years. So if we consistently invest 500 pesos every month for 35 years, our total contribution is 210,000, and with 12% average annual return, our investment can grow to as much as 2.9 million pesos. So if we have 30 years to invest 500 pesos every month, our total contribution is 180,000, and our investment can grow to 1.6 million, and so on. So how much more if we are investing 1,000 pesos every month? So if we invest 1,000 pesos every month, our investments can double. Okay? So in these examples, we can clearly see the big difference between money saved versus money invested, right? Because if we save 500 pesos a month for 35 years in a savings account, the total sum would just be 210,000 pesos. And with inflation, its value can be lower, because what happens to our money in a savings account in the bank? If we still do not know this, most banks will only give us 1% annual interest rate or less. So applying the rule of 72, if we put 100,000 pesos in the bank, we will have to wait for 72 years before it can double and become 200,000, right? So how much more if we are getting 0.5%, right? So can you imagine waiting for 44 years? 144 years? However, we are not saying that we do not like banks, and we will discuss later in the next slides why we need them as well. So the key point here is the interest in savings accounts is too low to offset inflation and increasing taxes. So where then can we put our money so it can grow and balance inflation? The answer to that question is the stock market. So we can put or invest our money in the stock market. Okay? So many of us have this misconception or wrong impression that investing in the stock market only belongs to the rich or the wealthy. We used to think that investing was only for this group of people. That's why we are all fortunate to be here, because as early as now, we will correct this misconception. Now we know that investing is a great way to be rich or wealthy, especially for normal people, the working class or the middle income earners. Anyone who has the means can invest in the stock market. It is in the stock market where we can find investment platforms or financial instruments that will help our money grow to offset inflation and increasing taxes. It is in the stock market where we can enjoy 8 to 12% interest rates for the money that we invest. And of course, we invest for our long term goals, such as for our retirement fund and big purchases. Further, we can invest in the stock market in two ways. These are through direct investing and indirect investing. So, direct investing is when we actively participate or actively trade in the stock market. We participate in the buying and selling of shares of stock or stocks of a company, right? So an active trader is someone with the knowledge and skills to participate in trading in the stock market. A lot of research, training, and time is needed before we can become a successful trader. So if we are not into direct investing, or we do not know how to actively trade in the stock market, we can still invest in the stock market through indirect investing. And that is investing passively in mutual funds. So if we are new to investing, it is recommended to invest in mutual funds and learn from there. So why mutual funds? One, it is easier to do. Two, the money that we invest will be handled by professional fund managers who are licensed and certified. Three, a mutual fund includes several companies and not just one, which provides a diverse investment portfolio. And four, investing in a mutual fund requires a low investment minimum amount, because you can already start investing with just 1,000 pesos. So how do mutual funds work? So a mutual fund is a company that pools money from many individual investors like you and me, and the fund managers invest that money in securities such as stocks, bonds, and other assets of companies within that fund. So the fund managers are the ones who invest our money or buy shares from these companies. All we have to do as individual investors is to continue investing or adding more money to our investment account and wait for our money to grow. So the generated returns or gains that we receive from our investments are from the profits or earnings gained by these companies, and our returns will depend on how much we invested in that fund. Further, if you are interested in learning more about investing in mutual funds, please talk to the person who invited you so you can attend free classes on mutual funds investing. So, the key point here is understanding the concept of compound interest using the rule of 72 makes us realize that there is no such thing as double or triple your money in 6 months or in a year, because those are most likely scams. All right? And before we can invest our money in mutual funds, let us first understand the concept of building a solid financial foundation. So, a strong and solid financial foundation will provide us with the financial security that we need because these are the building blocks of true wealth. We need to understand that in order to achieve financial security, we should correctly start somewhere, right? So, and we need to properly build our financial foundation so that when there are challenges or problems that we encounter, such as sickness, unemployment, emergencies, crisis, pandemics, we still have that financial security, that peace of mind. So, we build our solid financial foundation from the ground up, and it should look like this according to priority. First, we must have proper health care. Second, we must have proper protection or life insurance. Third, we should be able to manage and pay off all our debts. Fourth, we must have an emergency fund. And lastly, we should be able to save and make long term investments. So, for proper healthcare, we have three types of healthcare: we have the short term healthcare, the senior care, and the long term healthcare. So the short-term healthcare is the traditional HMO. This is the healthcare that we get from the company where we are employed. It has no life insurance coverage. Renewal is not guaranteed, especially if there are high claims, and it only covers until age 60. So after we retire or when we are unemployed, we no longer have healthcare or health insurance. Also, any unused premiums are not returned to us, so it's good as nothing, right? And just like short-term healthcare, senior care is the healthcare coverage that covers beyond 60 years old. But this one is very expensive due to conditions or illnesses that we might be having or experiencing when we get older. Annual premiums also increase as we age, and renewal is not guaranteed. So we do not recommend waiting to be at this age to get this expensive healthcare when we have the option of getting a long-term healthcare while we are able and insurable. So the long-term healthcare is the healthcare or healthcare coverage that has health savings accounts. Or sorry, account. It is renewable and has a fixed premium and it has insurance coverage. All unused fund accumulates with interest because the unused premiums are being invested. And the best part is it covers beyond age 60. And we will share with you in the next slides the long-term healthcare program that we have here in the Philippines. So having the proper healthcare is the start of building our solid financial foundation. The old saying, health is wealth, rings through because without proper health care, we might end up spending most of our savings and investments when we get sick or when we are hospitalized. All right. The second block. This is we need to have proper protection or life insurance. So the main purpose of life insurance is to protect our loved ones, businesses, or properties the moment we die. So, as breadwinners or a working spouse or parent, our income is our superpower, right? Because it is how we provide for our family to give them a comfortable life. our family depends on our income for essentials like housing, food, clothing, and education. If we do not have life insurance, and if something happens to us, such as if we get sick, or worse, we die too soon, there is no guarantee our families will be comfortable. They will surely struggle. However, if we have life insurance together with some savings and investments, these can replace our income should something happen to us. So life insurance can help protect our family even when after we are gone. So with life insurance, the basic needs are at least met since it is a replacement for the income that the family used to receive. So we get life insurance not for ourselves, but for our families who are depending on us. And to know the right amount of coverage that we need, we compute for the coverage by multiplying our yearly or annual income by 10 years. So why 10 years? We need to prepare our family that we leave behind with enough money to support them, pay for the essentials like housing, for food, clothing, education, loans that we will still need to pay, and other expenses. And for our family to be able to adjust with ease to these big changes without adding the burden of financial stress or hardship. All right. So going back to our formula, if our annual income is 240,000 pesos times 10 years, the amount of coverage of the life insurance that we should get should be at least 2.4 million pesos. All right. Okay. Next, we should be able to manage and pay off our debts. It is a known fact that it is easy to borrow money or get a loan or use a credit card because we can instantly buy the things that we want. And part of establishing our financial foundation is eliminating debts, especially the bad debts. We need to learn how to eliminate all our utang because if we ignore them, pretend they don't exist, they will continue to pile up. And one way of eliminating debts is to increase our cash flow. We find ways to earn extra income like a side hustle or a side gig. Okay? And if we want to learn more about ways to pay off debts, we also have classes for that. Okay? So just talk to to your inviter for details. So the key point here is to live below our means so that as much as possible we won't get into debt by getting more loans. So overall, let's aim for a debt-free life and say goodbye to debts or utang. Alright? Next, we should have an emergency fund. So this is money that is set aside in cases of emergencies such as job loss or sudden unemployment, accidents, home or car repairs, unforeseen medical expenses, and so on. So this is different from our other savings and investments, okay? So this is the money that we put in our savings accounts in the bank that has ATM accessibility. So whenever there is an emergency, we can easily withdraw the money, and that's why we still need banks, as mentioned earlier. So having an emergency fund makes us prepared for any sudden financial situation, and it prevents us from using our insurance or investments in times of emergencies. All right? And to compute for an emergency fund, we compute this by multiplying our monthly expenses by 12 months. Normally, it is 3 to 6 months of expenses. However, with this pandemic, it is suggested to have at least 12 months of expenses. So to start, we list down all our monthly expenses such as rent or mortgage, utilities, groceries, internet bills, cable and phone bills, and others, and multiply the total by 12 months. So for example, if we have 10,000 pesos monthly expenses times 12, we should have at least 120,000 pesos as emergency fund in our savings account. So we can always start small and eventually we can build up our goal amount. So first, let's say aim for a 3 months worth of expenses and later 6 months and then aim for the 12-month goal. All right. And lastly, we should be able to build up our savings and investments. So when we are young and working, we need to save up for retirement. We need to have enough money to support us when we no longer have jobs or active income. And if we do not know this yet, we compute for our retirement fund using this formula. So we multiply our yearly or annual income by 20 years. So why 20? We are considering the number of years that we may live after age 60, and we need this big amount for us to offset inflation and increasing taxes. So if we are earning 240,000 pesos a year times 20, our retirement fund should be at least 4.8 million pesos. We might think we won't be able to save for this amount if we only have 20 or 30 years before retirement, right? However, there are ways that we can achieve such goal, and that is to invest in mutual funds and long-term health care. All right? So, to summarize, here is the solid financial foundation that you can take a screenshot of so you can have a copy of it. It also includes the action plans that to we need to take to establish our financial house, because with a strong foundation we will be provided with a well established financial house, which means a financially secured family. Again, for proper healthcare, we get the short term healthcare during our working years and the long term healthcare plan for our retirement years. For life insurance, we get the minimum coverage, which is our annual income times 10 years. We need to live below our means to avoid overspending and increase our cash flow so that we can manage to pay all our debts. We need to set aside an emergency fund, which is 12 times our monthly expenses. And lastly, we need to build up our retirement fund by computing our annual income by 20 years, and we can achieve our retirement fund goal by investing in mutual funds and long-term healthcare. And the next question is, how do we start, right? How can we start building our financial foundation? So for most of us who are new to these concepts, it might be challenging to start building our solid financial foundation. However, if there are three major financial needs that we must secure, these are proper health care, proper protection or life insurance, and savings and investments. And IMG is here to give us not just financial education, but provide us with the platform to start increasing our income and give us access to the different trusted companies that will offer us the right insurance and investment opportunities. And one of IMG's partner to help us build our financial foundation is Kaiser International. So Kaiser International is the only company in the Philippines that offers long-term healthcare that is coupled with protection or life insurance and investment. So in this program, we do not need to save separately for healthcare and another for insurance and another for investment. That's why it's called a three-in-one program, because with just one saving, we can already save for these three. So we have healthcare to pay for our hospital bills and as an HMO during our retirement years. We have life insurance to protect our family in case we die too soon. And we have investment to provide income that we need when we retire and when we live too long. Okay? So let's take an example here. So let's say we are 22 years old now and we get the Kaiser K100 plan. So the total contract price is 411,750 pesos, which we can pay monthly, quarterly, semi-annually, and annually, okay, or spot cash. So take note that there is also an annual policy fee of 500 pesos. So in this example, let's say we are paying annually. So that's 58,821 pesos plus 500 pesos policy fee every year for 7 years. Again, the Kaiser Ultimate Health Builder is a plan that we save for just 7 years. All right? So during the 7-year saving period or the accumulation period, we receive benefits such as free checkups, APs, dental benefits, and so on. Okay? Don't worry for the details here. You can talk to the person who invited you so that you can discuss more on the benefits of the Kaiser K1 Kaiser plan. Okay? So after the 7-year saving period, sorry about that. Next slide. Okay, so after the 7-year saving period, we will be given a certificate of complete payment, and then all we have to do is allow our money to grow for the next 20 years. Next 13 years. Okay, so during the growth period or the extended period, we will still get the benefits that were mentioned earlier. And upon reaching maturity or on the 20th year, our money that we save worth 411,750 pesos has now accumulated to 1.2 million pesos. Okay, so our saving for just 7 years can reach this amount provided we did not get sick and use a portion of the savings amount. Okay, and after the growth period and after our money has grown into 1.2 million pesos, we have the following options. We can withdraw the entire maturity value, we can withdraw portions of it, and invest the other portion, like withdraw 50% and leave the 50% invested, or retain the whole maturity value and let it grow further. So take note, however, that if we withdraw the entire maturity value, option one, we will no longer have coverage under the Kaiser plan. Hence, it is highly recommended to keep the whole amount if you don't need them or a portion of it invested so we continue to have healthcare coverage, which is the main goal or main idea of the Kaiser plan, right? And if we started saving for this Kaiser healthcare plan by age 22 and when we reach 60 years old, provided we haven't used or withdrawn any of our savings, the total accumulated amount can grow to as much as 6.4 million pesos. And by age 65, our investment can grow to as much as 10.4 million pesos. And that is how compound interest works. All right. So the Kaiser Healthcare Program is a health fund for when we get sick, but if we remain healthy, it becomes a savings and investment fund. So I'm sure our guests have questions in mind. So if you want to know more about the Kaiser Healthcare Program and the different Kaiser plans that we have, please talk to the person who invited you so you will be provided with more information. Okay? And aside from Kaiser International, IMG is also partnering with several huge companies in the Philippines providing healthcare, life insurance, investment, and other financial products and services. And with these partnerships, IMG is providing a lot of benefits to its members. So here is a list of some of these partner companies per category. So by being a member of IMG, we can avail of the products and services of these companies for free or at a discount. Okay? And I will be showing you here the benefits that IMG is generously giving the members to start saving for our future based on the financial concepts and principles of building wealth. So as of this time, there are 62 exclusive benefits. Benefits 1 to 53 are applicable for those based in the Philippines, and the additional benefits 54 to 62 are given to our OFWs or international members. So since we do not have enough time to discuss all 62, allow me then to highlight some of these benefits, okay? So first and foremost, we have unlimited free financial seminars, trainings, and workshops and financial checkups and classes. As of course, this is IMG's ultimate mission. Okay, and we have free 100,000 personal accident insurance. We have 50,000 life insurance from Fidelity Life, free eye checkup and eyeglass frames, free unlimited consultation at Kaiser Medical Center for members, and discounted medical services for members and their immediate family. We have a free mutual fund account with 1,000 pesos worth of shares. We have access to Kaiser Healthcare. We have access to Manila Bankers life insurance for affordable life insurance. We have access to free investment seminars and access to my trade if we are into direct investing in the stock market. And we can also avail of discounts on non-life insurances such as car insurance, fire protection, travel insurance, and discounts on real estate purchases. Okay. Further, we have access to services such as preservation, legal assistance, memorial services, and auto program. In IMG, we also have rewards such as traveling the world for free. We have world-class recognitions, and we can qualify for free HMO coverage when we continue to do the business ownership program and reach certain milestones. Further, we also have, or IMG is also providing its members with informative materials and online tools to support us in our online financial businesses. And we have free classes and trainings to learn these tools and the online system. And of course, for our international members, IMG conducts events and provides worldwide protection and benefits. And lastly, with IMG, we can earn extra income via the business ownership program to increase our cash flow. Excuse me. And this can be the start of our business career as a financial educator in the financial industry. So, to get more information on these exclusive benefits that we can get in IMG, please talk to the person who invited you. Okay? So, how do we start receiving these great lifetime benefits at IMG? The answer is simple: become a member. Okay, and this is a lifetime membership with yearly accreditation. And we have two membership options: the basic membership and associate membership. So, if you want to take screenshots of the next slides, you may do so. Okay, so if we choose to get the basic membership, we pay a one time fee of 6,000 pesos for the Philippine code. So, international codes for international members have different fees. So, if you are outside the Philippines, please talk to the person who invited you so you can get more details on these membership fees. Okay, and with the basic membership, the benefits that we can get are access to the 62 benefits, the opportunity to be licensed and accredited as a financial planner, 50,000 death memorial benefit, 100,000 accident insurance benefit, the online mutual fund account with 1,000 pesos worth of shares, and unlimited financial education and trainings and classes. So as we can see here on the upper right side, with just the basic membership, two blocks of the solid financial foundation are already covered, which is life insurance and investment. Okay? And if we choose to get the associate membership, we pay the one-time fee of 6,000 pesos for Philippine code plus the first month's payment of the Kaiser healthcare plan. So in this example, we are using the K100 plan, hence the total initial payment is 12,382 pesos. And with this membership, the benefits that we can get are access to the 62 benefits, the opportunity to be licensed accredited, up to as a financial planner, up to 500,000 burial or death benefit, up to 1 million accident insurance benefit, the online mutual fund account with 1,000 pesos worth of shares, and unlimited financial education trainings and classes. Plus, the opportunity to start a financial brokerage business with six-figure income potential, which will help increase our cash flow, which in turn will help us manage our debt, build an emergency fund, and increase our investments. And of course, we have our Kaiser healthcare plan, right? So with the associate membership, all blocks of the financial foundation are covered, which makes this a great start for us in building our own solid financial foundation. So again, if you want to take a screenshot of this table, you may do so, including the next slide. So here is a breakdown of the membership fees that we will be paying for. So take a screenshot of this slide as well and discuss in detail with your inviter. If you are interested in becoming a member or to learn more about our membership options, please do not hesitate to have a chat with your inviter after this class. Okay? So, after learning all the realities that we are facing and the benefits that we can get from IMG, what are we still waiting for? I'm confident to say that saving and investing are the right choices for us to start achieving financial security. Because when we delay this decision, time is running out on us. We will still get older next year, our kids will grow up and enter college, and we will need money to pay for their education. We will eventually retire and stop making active income. So the point here is to take action now, invest in the present to ensure a secure future for us and our family. And of course, be part of a community or a group that inspires you. When members of your community save and invest, you will be inspired to save and invest as well because the opposite will happen. When you surround yourself with people who are spenders, you will most likely spend more than you earn. Okay? Hence, find your money tribe that will help you rise from the financial challenges and help you achieve financial success. IMG's mission is to convert people from being spenders to savers and to teach them how to save the right way. And in IMG, we all start as savers and we can become an advocate, an educator, and an entrepreneur. So, being here today, you can be included in our movement, the 30M by 30 Financial Literacy Campaign. So, please provide your name and email address to your inviter so you will be counted. Further, we are encouraging all our guests here today to invite your family and friends or whoever who can benefit from this class. Okay, let's all share the mission and grow our financially educated community. And as of today, we are able to reach 4.1 million Filipino families around the globe. So let us all be part of this advocacy and start building a better future. Remember that financial independence is not a dream, it is a decision to make. Don't just dream about financial security, make it happen. And why not start our journey towards financial freedom with IMG? Thank you again, everyone, for investing your time with us today. I hope everyone learned something new, relearned something familiar, and unlearned something that needs changing. Thank you, everyone. Let's continue to stay safe, and God bless us all.
Myself dreaming. I hate to sleep with one eye open. I see the headlights turn to shadows driving past. I hope one night it's not you going, 'cause you woke up and realized what you could have. You sleep with peace of mind, you don't